All right, everyone. Let's bring down that music. Okay. Hey, what's up, guys? Hello, hello, hello. Come in. Let me adjust the mic here. All right. Okay. Hopefully my audio is working perfectly fine. Oh. Okay, I think everything's good. All right. I think the replay here is perfect. You guys shouldn't be seeing any interruptions with the audio or any kind of cutting with the audio. So probably, well, hopefully, not probably, hopefully no issues with the audio. Let's see. Okay. Hey, what's up, guys? Hello, hello. All right, let's begin, guys. Let's begin. So, if you guys have read the description box down below, we're gonna be specifically talking about the S&P 500 or ticker symbol SPY. Now, I know some people just like to use the index as well rather than the ETF, but you guys can just simply translate what I talk about tonight on SPY to SPX. All right. So, as you all know, uncertainty, fear, and uneasiness has completely enveloped the markets, right, for the past a week and a half or so, especially after the February OPEX, which I've been talking about. Okay. Now, I also want to kind of give myself a pat on the back here with providing everyone with these 3 downside targets that have hit. All right, so first of all was 600, and then 585, and then 574.50, which is used as a very good level of support and a great pivot area today, right? Very good low pivot point area. And this comes as the daily 200 SMA right here is climbing up higher and almost nearly coinciding with today's pivot at this 574.50 level. So 3 out of 3 downside targets have been met. Now here's the question: what's next? All right, so this is the question that I put on for tonight. Right, what's next? So here's the thing, right? So this fear, uncertainty, doubt, so FUD, right? It's not going to go away as easily as everyone thinks, right? We have a president that's really doing some erratic things that is definitely not needed or necessary. We have free trade agreements for a reason, and these tariffs just simply doesn't make sense from an economic standpoint. And I've given all this data, information, and all the research I've done for hours over the weekend, and typed it out for you guys in layman's terms in the report. So for anyone who's watching and are members of the report, make sure you guys go back to the reports that I've given out so far for the past couple of weeks. I've been really honing in on this topic, and again, nothing against the president, but I'm literally just going off of the fact of what is happening with the economy, right? And what his actions will do to the economy and the implications, right? So this is something that you guys should know for the future, especially if he continues with this erratic behavior on trying to shape the economy in the way that he wants it. At this point, I don't even know what he wants because of how erratic this is with the trade war and costly tariffs that will be passed on down to the consumer. Again, that's high school knowledge. If you think that's not the case, well, I don't know what to tell you guys, because that's just high school knowledge that you learn as a sophomore or freshman in economy class, right? Economics. So, or basic economics. I don't know when you guys learned it, but for me, I learned it in freshman year. So, you know, this is something that is something, you know, I hope I hope his advisors, I don't know if his advisors are qualified or not, but it seems like they're not really doing a great job of keeping him from having these erratic, explosive moments with tariffs, these nonsensical tariffs. He even so here's the thing, right? So there was a new trade agreement that Trump formed between Mexico, the United States, and Canada. And he did this because NAFTA, right, which is the trade agreement between these three countries for like the past few years before his first presidency back in 2016, I think, or 2017, excuse me, or 2016, yeah. And you know, he said that NAFTA was a bad deal, right? It was a really bad deal, even though there were very mixed results from that trade agreement, okay? And he set up a new trade agreement that both Canada and Mexico decided to sign because, again, they do not want to be left out from a very crucial free trade between these three nations, right? These three countries from north all the way to the south. So this trade agreement, I completely forgot what it was called. There's an entire acronym, but like NAFTA, right? NFTA. Did I say that right? NAFTA. There you go. But you know, he basically, I think it was last month, or I think January, I think, he attacked his own trade deal, saying that it was a bad deal. Okay, so let that sink in, right? So he's calling out that the previous trade deal that was made between these three countries, including the US, was a bad deal. But the thing is, that trade deal is the trade deal that he made back in 2017, I think, or 2018. So, you know, this is what I mean when I'm saying it's erratic, right? It seems like he has some sort of short-term memory loss where he doesn't even remember what he even did in his first presidency. And so he's also just calling that his own trade agreement out and saying that it was a bad deal. I don't even know if he even knows that he's calling out his own trade deal bad from his first presidency, and then now he's using that as a precedent to start this costly trade war that's already costing things and people that are affected by it. So here's the thing, right? So the markets are now, so based on all of that, the markets are now moving in anticipation of those negative implications that this will have. And we've been seeing that so far with the overall bond markets as well, right? And we've been seeing, you know, the bonds like the 20 plus year Treasury bond ETF, or even just IEF, right? Ticker symbol IEF or IEI. All right, so these are the shorter term maturity bond ETF, 7 to 10 year, or the 3 to 7 year. Okay, and we've been seeing this, right? As people have been flying to safety, they want safety havens as this fear grows. And again, this is not because of this bond price movement to the upside is not because of the fact that people think that inflation is cooling down further and the economy is doing a lot better, right? This is not because of that, right? I've already seen some comments online saying that this is why this is happening, and we're seeing interest rates falling down. But the interest rates are falling down because people are flying to safety. There's a demand in bonds right now, a flight to safety, and so bond yields are coming down with the bond prices going up because, again, they're in an inverse relationship, right? I went over this a plethora of times, and again, it's a very simple relationship. There are a lot of details and nuances to that as well that you guys can look into if you want, but just from a general perspective, this is what we want to see. So based on all this erratic movements coming out from this current administration that's affecting the economy and especially the labor market and inflation, people at Wall Street now is increasingly becoming worried. I think there was a survey done on Wall Street today that I posted in the Discord that investors are now really worried about the economy when a couple months ago they were very hyped up and excited that this new administration will potentially prop up the economy and continue this amazing bull cycle, bull market run that we've had since 2022, right? Or 2023 if you guys want to. It doesn't really matter. As long as you guys know that we've been having a great growth in the overall market and economy for the past around 2 years, 2.5, 2 years after that bear market in 2022. So, the thing is, this bull market wasn't without faults, right? Obviously, there were problems, but again, the markets move in anticipation to the future, right? And it was pointing towards slow but progressive moves for declining inflation, right? At least a deceleration of inflation and a more balanced labor market, right? So now that this is being disrupted, okay, people are now flying to these safety havens like bonds. And so I've seen a lot of people getting confused with the fact that, hey, they're celebrating that yields are coming down. Great, that's great. But this is just because of the fact that we're seeing demand alone bringing up bond prices up higher, while on an inverse perspective, yields are going down because of that demand in bonds. So don't get this confused, guys, right? Yields coming down is not, it's a great sign. It could be a great sign, but from this short-term perspective, it's only coming down because we're seeing great demand in bonds as people are flying to safety. Does that make sense, guys? Make sure you guys smash the like button if that makes sense. Okay, so again, I'm not dogging on the current administration. I'm not saying that, right? I'm just stating this from an objective perspective. I've given everyone in the report as well objective data, and based on what has happened in the 2018 to 2019 costly trade war, that eventually all the effects were literally out the gates once the Black Swan event, COVID, occurred, right? So, I was speculating last week that there could be a potential Black Swan event with the bird flu, or now maybe even measles, but I don't know that just yet. I'm just speculating. But if things follow the same pattern from 2018 to 2019, we could be seeing a Black Swan event next year, or just based on the current economic actions alone and orders set by this current administration, we could be seeing some severe economic contraction, which should be erasing all the growth and recovery that we've had so far since 2021. Okay, and I've already mentioned this to my members in the Discord a couple minutes earlier before the stream started, but I'm already seeing signs that based on the metrics that I've been following, again, I'm going to reveal these metrics in next week's report. So if you guys want to know what that is, make sure you guys become a member. But it kind of seems like the Fed might have to put quantitative easing back on the table. Now that sounds a little too much. Maybe you guys might be thinking that, hey, Andrew, isn't that speculating? Well, thing is, the yields, bond markets are already kind of pointing that way, unfortunately, right? And again, quantitative easing right now as a reactionary move from the Fed is not good, right? That means that they're going to have a complete pivot from a quantitative tightening monetary policy that they currently hold right now, and if they switch to a quantitative easing, that's basically is stating that, hey, the Federal Reserve is not confident anymore with their current monetary policies and actions, and they need to take strict and quick action by providing liquidity to the markets, right? And just an overall quantitative easing. So this could also contribute to overall inflation. Okay, we saw this happening. This is one of their mistakes of having elongated QE from 2020 to 2021, and of course, obviously, they know this too themselves, and so hopefully they won't make the same mistake. But just the fact of quantitative easing becoming kind of a negative connotation for the next couple of I don't know when they could possibly do this, maybe next year or late into this year, depending on how the economy goes, could spark some even more FUD, more not just FUD, but more just overall uncertainty into the markets, as if the Federal Reserve becomes uneasy based on how the the economy is going is not going to be good, right? And again, just from a general perspective, from a general metric, bonds are kind of showing that way already. So this is something that you guys should be watching out for. You know, it seems like for the past couple of weeks, I mean, we've fallen here. Let me give you guys a quick view here. Okay, we've fallen about 6.50% from all-time highs, right? So we are officially in corrective mode, right? So we're in that textbook correction range of -5% to 10%. And if you start to break lower, and if you get to that -10% area, then that's a perfect time for bears to come in even stronger and cause a -20% stock market crash, right? And that's going to spark recession fears. It's already sparking recession fears now. So again, this is just data. I'm not holding any type of grudge, although I am a little bit I'm a bit annoyed at what's happened so far, just based on the complete violent ups and downs and seesaw price action in the overall markets, which wasn't really needed. We just needed a textbook correctionary move to the downside. But you know, all these gap ups and gap downs are really just making both sides, sellers and buyers, completely exhausted here. And who knows, that might just be the market's way of trying to shake out a lot of these late term buyers or just sellers who have got too cocky. Who knows, right? So as long as all these levels continue to hold, especially this third level that I've drawn here for you guys at 574.50, we should be good to go. Now, I've given everyone these levels in this week's CFO Swing Watch Report technical analysis video that is now public. Again, it was then private, but it's now public. You guys should watch it on my channel here. It's the most recently uploaded video, so make sure you guys take a look. But I gave everyone these 3 targets, right? I've had these targets before, but I reiterated these targets on Sunday night when the video came out. So make sure you guys watch that video, right? These 3 targets, downside targets for hedges or for any type of swing trades or any day trades to the downside. Okay, now here's the thing, right? So here's the reason why I'm saying it's this erratic behavior coming out from the current administration, right? So today, it seems like the advisors are trying to tell Trump that, hey, you know, this is becoming a little bit too negative now, right? People are reacting negatively, especially even coming from his staunch supporters. It's becoming a little bit too much, and I guess his advisors have told him that because he announced at the end of the market, he literally timed this, that he's thinking of rolling back the planned tariffs and the tariffs that went into effect today on Mexico and Canada, which really, again, was not needed. Okay, and again, he's attacking his own trade agreement that he made in his first presidency, right? So I don't know what's going on here. I don't know what he's thinking, right? This is completely erratic behavior, all right? And again, if you guys didn't know that, well, here it is. I'm telling you guys what has happened, all right? He's attacking his own trade agreements between Canada, Mexico, and the United States, except he hasn't said that publicly. So I don't know what he's doing. I can't understand what he's doing, all right? So, you know, these tariffs are, again, unnecessary, and hopefully his advisors have told him that, because again, at the end of the market today, at trading hours, he came out stating that, you know, he might lay off from sending these tariffs and maybe even future tariffs, and the overall markets began to gap up or had a nice strong pivot at the close, and you can see this in SPY futures. Okay, oops, all right, so here it is. Right, so ES, this is the mini futures, right? So it's a very nice gap up so far overnight, and even on futures, we had a nice pivot at this daily 200 SMA, which again, even if he hadn't said that, I would have expected some sort of buying to come in, at least as long as, you know, all these FOMO buyers who are trapped now at the upside here are trying to DCA, dollar cost average, into this 200 SMA retest. So even if we didn't get that news after hours, I would have expected some sort of bounce heading into midweek tomorrow. So for SPY right now, I think overnight trading hours, we're seeing it at like 580, if I remember, like 580 to 581. It's ranging like that right now. So that should be interesting to see tomorrow morning to see where it opens. But I really do want to see a retest of 585 again. We have kind of moved very quickly away from the daily 10 SMA. Again, the daily 10 SMA did not reach the price or catch up to the price action even yesterday. But due to this very large move lower yesterday, the 10 SMA has curled lower and has now broken below the daily 50 SMA here, which again, still bearish. We're in a downtrend, a key downtrend here, a textbook downtrend at that, with lower lows and lower highs. So there's something that you guys should be watching out for a potential retest of 585. Again, we've already done that today. I wasn't expecting us to make a complete round trip of a retest of 585 and then continuously going back down, but that is what happened, especially when Trump opened his mouth to speak again in the late trading hours of today. So, things are moving very, very quickly. It's definitely a scalper's market again, and that's not really trading environment that I'm accustomed to. So it's something that most people aren't very used to. I know there are a lot of people who say, "Oh, I love volatility," but it's not that fun when when you have these very erratic, very violent seesaw moves up and down on intraday, right? So at some point, all of these people will be tired of this, right? There's going to be some sort of capitulation in the price action itself from both the bid and the ask side, and eventually, once we have a nice pivot, which I think we did have today at this daily 200 SMA on all the overall markets, like even QQQ. I think Nasdaq itself had a retest today at the daily 200 SMA, if I'm not mistaken. Yeah, there it is. Right, so very nice retest, a very nice close at that over the daily 200 SMA. So we haven't retested the daily 200 SMA since last year, right? In August, right, when we had that yen carryover trade, completely, scaring the U.S. equity market, since the U.S. equity markets were involved in that yen carryover trade. Again, I'm not going to go over that. I went over that multiple times back in August of last year. If you guys still don't understand that, well, just look it up, okay? So, with QQQ, I really want to see a very good bounce, since leaders have had such a horrible last couple of days. And especially when I take a look at MAX, right? This is the Magnificent 7 ETF. From Roundhill, it seems like an opportune situation here for buyers, at least long-term buyers, to try to at least have a nice line in the sand around 48.50 to 49 as it tries to hold over this daily 200 SMA. So I kind of liked how even after that debacle that occurred the last 30 minutes when Trump began to speak, and then obviously he spoke again after market hours were after the market closed. Excuse me. It seems like at least the price was able to stay over the daily 200 SMA. And a little disclaimer: there's a trade on this right now on MAGS, but again, I think it's time for leaders to try to at least pivot from here. It would make sense for it to pivot from here, just because of the fact that the prices have come all the way back down to their own respective points of pivots and relative areas of demand and support levels, and just overall critical long-term SMA support areas like the daily 200 SMAs or the weekly 50 SMAs. If you guys just want to take a look at the weekly time frames for any tickers that you guys are looking at, especially when it comes to these tech leaders. Does that make sense? Whew. And everyone, if this is making sense, I see you guys' reactions in the chat. Make sure you guys hit that like button down below. Oh, we have about 20 people in here now. Welcome. Okay, but make sure you guys hit that like button down below. Right, I'm just going rapid speed here tonight, so hopefully you guys are understanding what I'm saying. But please ask any questions if you want me to clarify something. But again, guys, I've just for anyone who's watching who is not a reader of the CFO Swing Watch report, I've given everyone all of this data and analysis of what could occur into Trump's second presidency since last year. So, I really have prepared everyone at this point. Everything that I've said has panned out so far. And it seems like, again, the economy is currently still pointing towards, that recession, or at least, if not a recession, at least some sort of a contractionary phase for the economy. And yes, there's the economic cycle goes from growth, contraction, growth, contraction. Yes, we do know that. But again, what was happening for the last 2 years or last 2.5 years? Growth. Right? And now we've had this sudden pivot, right? When we had this nice little cool off period heading into the end of 2024. But again, this new presidency, this new administration, it just didn't make sense from an economic standpoint, right? Again, I'm not dogging on him from a political standpoint. I'm dogging on him on the fact that this wasn't needed, right? And again, a clear indication of why this wasn't needed was, well, he's dogging on his own trade agreement that he made up to replace NAFTA between Mexico, Canada, and the United States, right? So this is from an objective standpoint, right? Not a political standpoint, not from which side is the best. It just doesn't make sense, right? And especially from a person like me, who analyzes objective data, looks at economic metrics, it just didn't make sense, right? As the markets and the economy continued to have a stellar growth and year-end recovery from the market and the overall economy in 2022, and things were just becoming just about towards a final recovery phase into a more, I guess the correct word here will be normalcy, right? Whatever that could mean for you guys, right? From your own subjective perspective. So, to me, again, please do not misunderstand me, right? I have my own personal views, right? But right now, I'm not telling you guys these things from a personal standpoint. I'm telling you guys from a objective perspective, not a subjective, right? From an objective. So when I say that when Trump is attacking his own trade agreements, that's exactly what he's doing. He's attacking his own trade agreement that he made in his first administration, right? Again, you don't need to believe me. Just go back. If you're a Trump supporter, if you guys like his policy, great, right? Just take a look at the fact that he is attacking his own trade agreement between these three countries, including the US, with these tariffs. That's it. That's all I'm saying, right? So again, hopefully the markets can get over this once they realize this is happening. It seems like at least, again, the word on the Wall Street is that people are kind of starting to see this, saying that maybe this entire sell-off could be overdone, as this is just erratic behavior coming from the first 100 days of a new administration, which could be true, which I'm hopefully believing that this could be the possible explanation, and possibly the only reason for the markets to start pivoting back up higher. Because again, who doesn't want the markets to stop being so erratic and violent with overall market vol just absolutely expanding to the upside like we saw today, right? So again, please do not take things in a harsh way from me when I say these things. Okay, I'm only here to give you guys the truth, the objective facts. Okay, I was also talking about the overall economy in 2022 when there's a different administration, right? When things were still pretty bad for inflation. We saw inflation hitting, I think, 9.1% in June, which was not good, right? And I was kind of dogging on the Fed too, that they need to do something, right? That something needs to be done here, and it seems like they're still not really learning from their mistakes from their QE policies in 2021. So again, guys, if you guys have been following me for some time now, you guys should know this, right? So please don't take these things to heart, right? Put the emotions away for now, right? And just look at this from an objective perspective, okay? Just letting everyone know that and where I stand on this when I'm talking about the overall economy and inflation and labor market, right? Okay. So again, I know all the readers from people who have been reading with us for like the last 2-3 years. If you guys go back to the 2022 reports, I always talked about what the Fed has to be doing and what we need to be expecting from the Fed in order to fight this inflation, this ongoing, crazy tight labor market, and what they need to do to unwind that. We've talked about that. We've discussed that multiple times, and possibly what the current administration should be doing and what it shouldn't be doing. So, there's that. Okay, so again, now before I leave you guys tonight, when it comes to where we are headed next, I don't know, right? Things are so erratic. The markets are so hypersensitive to what our president is saying, what our President Trump is saying. So, it's really hard to tell because, again, he's his own person and his words are literally moving the markets. This is a repeat of what's happened in his first administration, especially trade war in 2018 to 2019, which was also, again, not needed. Again, people can have different opinions, but the data says otherwise. Okay, the implications and what has occurred afterwards says otherwise, right? So you guys can pick up a history book, take a look at it, and see why his terrorists don't really work in modern history, and his kind of archaic mercantilistic ways. But hey, I'll leave that to the scholars out there, the economists. I'm not one, so there's that. Okay, so I just know and read a lot of information. I remember everything that I learned at school, and college courses as well, from friends who are in this particular side of the world, and etc. Right? I like to get a lot of information, as you guys all know. So, again, if you guys found anything offensive in this video tonight, I'm sorry. My apologies. I'm just giving you guys objective data. This is something that you guys should all know. Okay. So with that being said, okay, I don't know where the markets are headed. I don't know. If people are saying they know exactly where it's gonna head, they're liars. They're lying, right? All I know is that the money, right? The money is rotating still towards value stocks, right? And defensive stocks, defensive sectors like healthcare. We've actually been seeing a little bit of money rotation into financials, which is kind of interesting to see, as this might actually work out into the next quarter here, into quarter two and into mid-year. But so far, things are still looking a little bit iffy, but I'm starting to see a little bit of a trend here in the financial sector, but we shall see. We shall see. Okay. Oh, and before I leave you guys here, I think, let's see. Let's see. Oh yeah. So XLY, there it is. Okay. So, and William Reed, I am going to not allow that in the channel though, because I don't want some, politics there. So no hard feelings, but okay. So, with XLY, okay. The reason why I'm bringing this up is for well, I've said this. I've gone over this in, I think, last week's report. Okay, so this is XLY. Okay, so this is a consumer discretionary. All right, and I've gone over this multiple times. So just go back to the videos that I posted. I believe it was 2 weeks ago. Yeah, 2 weeks ago, and yeah, Commander Sparky, yes, the money into XLF is interesting, right? I'm gonna most likely write about more on that in the next couple of weeks as we head into the end of quarter one, especially once we do see that rebalancing for the first quarter, and as we head into the second quarter of this fiscal year. Yeah, I'll definitely write more on that. Make sure you remind me, bro, if I forget. But so with that being said, with XLY, yeah, so I'm starting to see potential signs of XLY pivoting to the upside. Now, why is this important? Well, this can further give us proof that the markets might just be a little bit overdone with the selling here, right? And if you take a look at even consumer staples, right, XLP, things are looking a little bit off here, right? We saw a lot of these consumer stocks and consumer staples, especially today, moving lower, okay? And when you compare this to XLY, consumer discretionary, which is the non-essentials, or people, basically this is what people buy. things that people buy with their extra cash, or people that people who want to buy things as a want, not as a need. Okay, this one has been moving down, obviously, right? I gave everyone a warning. I gave you guys an early look as to why I think XLL will go down, and XLY did indeed continue to move lower very, very rapidly. But again, you guys can read that in the report. Okay, so you know, this kind of relationship between consumer staples and consumer discretionary has kind of been my own leading metric and indicator of where the markets can potentially go in the next couple of days and weeks. But again, I still don't know what's going to happen in the next couple of days because of this erratic behavior coming out from this current administration and from President Trump, right? So you know, I just like the fact from a technical perspective, this current data that we have, this nice doji, possibly we can have a nice gap up tomorrow to break over today's highs on XLY, which could, on the other hand, bring down XLP from an inverse relationship perspective and bring down XLP back to like 81.50, let's say. Okay, so this is one indication that we could possibly be seeing a potential bottom if nothing else happens. But again, I don't think that's something that we could be counting in for, right, from the past couple of days. But hey, Sparky, you said JPM more in particular. Yeah, actually, I was taking a look at JPM earlier tonight, and Citi, right? So Citigroup, so ticker symbol C. Okay, and I'll go more over on that on these two tickers either in this week's report or as we head into March OPEX or into the end of Q1. Okay, but yeah, I've been seeing some inflow into C and JPM as well, but overall the entire XLF financial group or sector. So this should be interesting. I'll definitely take a look at this and write on this in the report in the next couple of weeks. Yeah, that's what I'm believing here based on what I'm seeing from the sector data here. As I went over all these sectors and just scanned through everything. So make sure to keep you guys up to date in the private CFO Discord community. All right. But hey guys, thank you guys so much for liking. Thank you guys so much for commenting. Thank you guys so much for the support, the ongoing support. Hopefully all these objective data points that I've been giving you guys, everything has been absolutely useful, but most importantly applicable. Okay, now before I leave, I have an announcement to make, so please stay here until the end. Okay, so first of all, if you guys are new here and if you guys want to join the CFO Stream Watch report and become a reader, and at the same time, if you do become a reader, you'll gain full access to the private CFO Discord community. Okay, you guys can just DM me on Instagram and I'll give you guys a very, very good discount code for your first 30 days as a reader, which you guys will not regret. Okay, I can 1000% guarantee you guys will not regret becoming a reader and enjoying and reading all these reports that come out every single Sunday night. Okay, and also becoming a part of the CFO Discord community. Okay, but that's not the announcement. But I am about to launch, okay, something a little bit unique. Okay, so if anyone is, well, there are people who have been interested, a couple people here and there, but people have been interested in just buying one single report alone for a particular week that they want to see my research on, right, or something like that, right? And so people have been asking me, hey, can I just purchase the report for this week, right? And that is something that I am looking to do in the next couple of weeks. So if that is something that you guys are interested in, please again DM me on Instagram at chartsfocus1. Okay, so again, this option to just buy a report could be a viable option soon. I'm still working out the details, but if that comes to fruition, I'll let everyone know. But that's just a small announcement that I want to make today, because I did get some requests last time, a couple of weeks ago, I think. So yeah, there it is. And Sparky, you said consumer staples rejecting today from some names. Today from some names pushing higher was a sign for me we might start moving back up temporarily with other factors that I'm tying in. Yes. That's exactly what I want everyone to do. That's the purpose of the analysis, the countless hours of research that I do, and just again giving it to you guys in a form that is easy to read in every single report in layman's terms, and just giving you guys information that is useful and applicable, and helping you guys, make yourself your own, conclusions based on that data. And again, Sparky, I am very proud of you for doing that. Okay, so hopefully you guys, have been enjoying these videos and these live streams. And again, thank you guys so much for all the likes, for even coming in to hear me tonight. You guys are the best. Okay, and yes, I just want to make the announcement with that report. Okay, and yeah, I'll see you guys on Thursday. Good luck tomorrow. The markets are going crazy. There's still this movement towards a safe haven into bonds. Again, yields are not going down because of whatever the economy is doing or whatever the current administration is doing, but it's just coming down because of the fact that we have a surge in demand from investors into bonds, making bond prices continue to bid up higher. Okay, so that's something that I really wanted to clear the air of, since I've been seeing a lot of that on Twitter. Okay, so yeah, that's one of the major points I want to give you guys, since I've been talking about bonds and the overall bond markets and what it has been telling us. For example, like inflation might be on the rise again. Inflation might be re-accelerating after the last 2 years of deflation, or at least not deflation, but disinflation, where we're seeing a deceleration of inflation. Okay, or did I get that right? I think I got that right. Yeah. Yes, disinflation. That's correct. I don't know why I'm doubting myself. I just had a lot of stuff in my head tonight to tell you guys, so. Hey, no, thank you, Sparky. Thank you for always commenting and joining the lives. But yeah, you're welcome. All right. Okay, so that is it for tonight, guys. Make sure you guys remember that announcement. And again, if you guys want to be a reader of the very, very detailed and very, very useful and applicable CFO Swing and Watch report, all you need to do is DM me on Instagram at chartsfocus1, or just take a look at the description box down below. You guys will see that link. You guys can find it. I know you guys can. I don't think I need to direct you guys, hopefully. It's just in the description box down below, and you guys will see that link. All right, I'm gonna close out the stream now. Have a great rest of your night, guys. Good luck tomorrow. I will see you guys on Thursday at the same time, 8:30 p.m. Pacific Standard Time, or 11:30 p.m. Eastern Standard Time. All right. Thank you guys so much for joining. Wow. Thank you guys so much for the reactions there in the chat room. Thank you guys. Thank you. All right. But yeah, have a great rest of your night, and thank you so much for joining and watching.